In our last video, I gave you 3 stocks to buy right now that are a great opportunity, even though the market is starting to go back up. And it could always come back down, but right now we are starting to trend back up, and the bottom could be in. And like I already told you in the last video, Meta, Amazon, and Alphabet are phenomenal buys right here, right now, today. But in this video, we're going to go a little bit deeper. And next up, we're going to be talking about finance and the 30% overall public portfolio allocation I have to these 2 stocks. So let's get into it. So first and foremost, we have Visa. Visa, the world dominant monopoly of every single swipe. Every single swipe that you do, that your friend does, that your mother does, that your father does, that etc. and etc. Every swipe, Visa makes money. Every single swipe that you do with a credit card, a debit card, you double click your iPhone and you pop it up against the payment pad and it goes through. Every single one, Visa takes a little bit off the top of that swipe. And so, because of that, because they're such a monopoly, it's basically them and MasterCard, and they're way out in front of MasterCard as well. I am invested in this company. Now, I have an overall 30% position built in Visa. I was hoping that they went lower, but things might be turned around and they might not. But at any rate, I'm still happy with the overall 30% position in this company. If they were to get down to a 40% margin of safety, then I would build an overall 60% position at a $2,000 in this portfolio, in this 10K portfolio in Visa. But why else do I really like Visa? Besides the fact that they're a monopoly, besides the fact that they're not going anywhere, besides the fact that, the world's going to continue to get bigger and people are going to keep on using Visa cards, debit cards, credit cards, their phone, doesn't matter. The cards are here to stay, okay? Whether they're digital or not. So the other reasons I like them is just because they have a massive free cash flow margin rate. Their margins are phenomenal. Like I said, all it takes is you to swipe and they get paid. That's crazy to me. Massive moat, massive Goliath of a company, and overall monopoly in the world. Okay. Not just in the United States, not just in Canada, in the world. Okay. I have a 34 multiple free cash flow at the end of this 10 years, which currently right now, I think they're doing about a, almost 36 PE. So I think currently right now they have a free cash flow multiple about 38 to 40 or something like that. So I believe at the end of the 10 years with what they're doing and their monopoly only growing, I think a 34 is pretty fair overall. Revenue of 37 billion. Of that 37 billion, 19.7, almost 20 billion of that is free cash flow. Just phenomenal. Like I said, massive margins here, guys. They have less than $1 billion in stock-based compensation out of that total overall almost 20 billion. Phenomenal. That's phenomenal for me and you as shareholders. That means that the money that they're bringing in, the free cash flow they're bringing in, they're not in the overall shares. They're buying back shares, but they're not super diluting us on the share-based compensation side of things. A positive net cash to net debt position of 12.7 billion and $1.6 billion, 1.6 billion outstanding shares. And like I said, they're continuously buying back shares, paying down debt, and raising their cash. And this could be a massive dividend name here soon as well, and they continue to grow that. Let's talk about the valuation. 3.65, almost 4% free cash flow yield forward and current. Great. Like I said, anything over 3%, I really love to see. PE ratio about 34 right now. A bit rich, but again, it's a monopoly, guys, and it's a massive monopoly. I mean, every single swipe, they're getting paid. Come on. Less than a 30 PE on the forward side. I like that. And less than 1 on the PEG ratio. I like that as well. Price earnings growth, really like that. So I have an intrinsic value right now, which is why I still believe they are a massive buy right now, because I believe their intrinsic value and their fair value is $473 per share. If you believe these analysis, if you believe a 10%, dropping down to a 9, 8, 7, and then a 6% revenue growth rate, right? If you believe that, you believe these EPS numbers, then $473 per share, almost a 30% current margin of safety, is a buy today. And that is why I have a 30% total position built out in this name. That's going to get you almost 11% on your discounted cash flow model annual CAGR, getting up to a $930 fair evaluation in 10 years time. And then almost like, yeah, basically a 10% annual EPS CAGR rate of $886, 10 years time. And again, they could definitely beat these EPS growth rates. And they could definitely have a higher PE than 25. They could have a 30 PE because they're such a monopoly. And then you have $1,063 they get to, and they're at a 12.2% annual CAGR rate. Either way, the average of the S&P 500 is 8 to 10% per year. So this is on the borderline, but remember I was buying it over 30% margin of safety. Between 30 and 37% margin of safety is where I was really buying majority of my position. So I was getting it a little higher at about, 11, almost 12% annual CAGR rate. So that is market beating. Like I said, free cash flow is supposed to continue to grow along with revenue and EPS growth rate. Yeah, this company is just a solid moat and easy money in my eyes. Just easy money. It's not going to 10x for you in the next 5 to 10 years, but it's going to consistently grow your money at a good market beating rate. That's why I love this company. It's a strong company to have in the public portfolio, and that is why I have it. Second stock for the finance section, PayPal. Yep. So we just talked about every single swipe that's made across the world on a Visa card is money in their pocket. Well, I do believe that the the electronic side and virtual payment side is going to continue to grow. I don't think it's going to eat Visa's lunch. And so I do believe they can coexist, PayPal and Visa, like they already have been all these years. But PayPal is in this super valuation mode, guys. The valuation just doesn't make sense. It doesn't make sense at all. I have basically almost my full position built up here. I have 60% of the total 100% position built up, $600 out of 1,000. And the reason I'm so fond of PayPal is just because they're dirt cheap. The fair valuation with very conservative numbers. This is like, I put in the most conservative numbers just in case I was wrong, just to make sure that even if I am wrong, I'm still going to make money or break even because the valuation is so silly. A 10, in 10 years, you're only going to pay a 10 for their free cash flow. When their current free cash flow is $7 billion out of $32 billion, 20% over the next 5 years, 23% over the last 5 years free cash flow margin rate, just massive. Over 10% current free cash flow yield, almost 10% forward free cash flow yield, sub 14 PE, sub 13 forward PE, a PEG ratio almost under 1. And look at these growth rates, guys. We're talking about mid digits. 4, 6, 4, 6, 4, 5, 4, 5, 3% revenue growth rate. I think they're going to at least be in the high digits, 7 to 10%. I think they're at least going to be in there. I think their CEO is great, and I think he's going to have this ship turned around. He came over from Intuit. He did big things over there. Guys, this is just silly. This revenue growth rate is just crap. It's crap. And I believe that it could grow massive, right? I think this is just, very conservative, not massive, but I think this is just very conservative. And I think it could grow, between 7 and 9% per year revenue growth rate. And if it does that, even at these growth rates, just super, super undervalued. Super undervalued. There's no other way to say it, guys. $102 fair value for a 10, right? Again, I think it could be a 15, and then you have a 47%. But I want to buy it being very, very conservative here, and I'll have full position built out if we get out of $51. So if things continue to go bad right now, currently sitting at almost $65 per share. If things get really bad, then, we get down to $51 per share. I'll finish building out my position. This is just silly. Braintree, PayPal is a global company. Global. People use PayPal all over the world. And everybody that uses PayPal and Venmo and all of their apps, they get paid just like Visa does for every little payment, every little process, every little everything. They have their new checkout thing. You know, you get on the app and they have great deals for you to check out and buy things on. You know, I just think what they're doing, they're really innovating. They're really doing things really well. And for a value company, you know, I would consider a value company, and they're just buying. They're $15 billion in stock base, they're buying back $15 billion in stock. They're buying back stock like crazy, so it's just going to jack up their revenue. They're just going to jack up their EPS growth rate through the roof, guys, through the roof. So that's PayPal. I think it's a phenomenal buy. I mean, even if you put it as a 5 PE, it's 20% margin of safety. Put it a 1 PE, okay, a 1 terminal free cash flow, then you're going to lose 1% of your money in 10 years. Wow. Wow, guys. It's crazy. They don't have to grow a lot. They're such a value company now, and I don't think their business is going to die anytime soon at all. So yeah, those are our 2 finance companies. Next up in the next video, we're going to be talking about our consumer travel names and our 2 health companies that we're invested in right now and that I believe are very, very good buys right here, right now. So stay tuned for that video. Check my comments below. Check the link below for my X, for my other socials, and also our High Five community. We're investing in trading meat. We do day trading, swing trading, long-term trading, investing. We have our own High Five community portfolio. That's $30,000 account. It's a challenge, you know, building it as fast as we can, but responsibly, and making sure that we're picking great companies for the long term. Appreciate you guys sticking around to the end of the video. Hope you guys have a great and phenomenal day in the markets and rest of your day overall. Thanks, guys. Catch you in the next one. See ya.